Good morning. Welcome. I am Taylor Lyles, Executive Vice President of your Home Builders Association, and I would like to say thank you for joining us today. I know there's a number of realtors, lenders, pretty much anybody on this call. I saw several people from quite a few industries. We're extremely excited to host you today. We've got an incredible opportunity with Amanda McCall of Prime Lending. We're extremely excited that she's taking time out of her busy schedule to come and join us. Today, we are starting off our first of 4-part series. It is Mortgage 101. We're also going to have Inspection 101, Appraisal 101, and we've got a surprise for y'all on the 4th one at the end, ABCs of Construction. We're extremely excited to be able to host these. We wish they were in person. We wish we had the ability to shake hands, hug people, laugh with people, but this is kind of our new normal. And we're trying to make the best of it. If we have any technical difficulties today, we apologize, but we're going to try to fix through them and make everything work perfect. Today, just a couple of things we have going on. We are going to have a Q&A. So in that box below, please get in questions. If you have anything for Amanda for the HBA, please get it in so we can get you answers and get everything rocking and rolling for you. If you're interested in the HBA and want to find out more information, email info@hbaofgreenville.com or give us a call. My personal cell phone, 907-0756. I'm here to answer any questions that you have about the HBA and what we do for the association. So what I would like to do is start it off. We're going to have Miss Amanda McCall. Lord have mercy, I'm already messing up. Amanda step up and kind of kick things off. So we're going to get a couple of screen shares going, so give it 2 seconds.
Hey everybody, I'm so incredibly happy to be here today. I know it's a little different in the world that we're in, doing all of this over Zoom. I know it's certainly very different for me, but I hope that we can, come here today, give y'all a ton of information, and like Taylor said, if y'all have any questions whatsoever, jot them down at the very end of this presentation. I will kind of go over all of that with y'all and answer any questions and kind of talk in more detail about anything else that y'all would like for me to go back over again. So today is going to be like a Mortgage 101. And I really wanted to take that and not only start with telling a little bit about me and Prime Lending, but also a little bit about taking the mortgage process from the realtor's perspective. So from the time that a client reaches out for that initial contact, what does that look like for an agent on the mortgage side? So how can an agent constantly be involved in the process, help that mortgage lender, and really understand everything that's going on with that transaction? So that's going to be a little bit about the presentation today. Kind of to start everything off, as I said, my name is Amanda McCall. I'm with Prime Lending. I have been in the mortgage industry for over 20 years now, always in the upstate. So this is definitely a big passion of mine and love of mine. So a little bit about Prime Lending, the company that I work with. Prime Lending I kind of want to set a little bit of a difference of why are we different. So we have been in the industry for over 30 years. We are backed by an extremely strong parent company, which gives us a tremendous amount of strength and stability in the market. We are local, which is huge. So we are in your neighborhood. We are here. We are working with you, our neighbors, our customers. So we're local, which is awesome. We are headquartered out of Dallas, Texas. We have in-house funders. We have in-house processors, and we have underwriters that work directly with our region. And work remotely, which means they are working extended hours and they are working sometimes 7 days a week, which is great. So a little bit about all that Prime Lending can offer. So we offer over 400 loan products and services. So pretty much anything that a client would need to meet their financial goals, Prime Lending is going to offer that to them. So of course we have fixed and adjustable rates. We can do conventional loan products. We can do all the government loan products from FHA, VA, USDA. We do construction and renovation financing. We do jumbo loans, which is going to be your larger price point homes. We're doing state housing loans. We offer a lot of our low down payment and options, such as like for your teachers, your Palmetto Heroes. And the huge service that we offer is a free rate float down, which is going to give your clients that protection that they need while they're under contract, but also the flexibility to lower the mortgage rates if rates improve before they close. So that's kind of the big overall view of a little bit about prime lending and how we're different. So I'm going to talk a little bit now about my team and specifically. So the McCall, Hannah, and Fox mortgage team. So the partnership began with Sharon Hannell and myself in 2003. And we have been very, very fortunate to be very successful in the upstate and have grown now to be really what we're saying is the Greenville's lifelong lender. So we truly want to be your source for financing for every client that you have and for every client's needs that they have, whether it be their first home buying purchase or whether it be their third, their biggest home, their downsize, their children's loans, anything like that. We want to be that need and meet that need for everybody. My team consists of 7 people. It's 3 loan originators. We have 1 junior loan originator. We have 2 loan assistants, and we have a marketing assistant. And then the big thing that I focus on again is that we are local. We all are from the upstate. We all live here. We work here. Our kids go to school here. Our money is invested in this neighborhood and in this area. And that means a tremendous amount to me that we are local. We know the area. Our reputation is in this area. And bottom line, we're not an online lender, which is huge. Okay, a little bit about how our team works. I am 100% focused on communication. If there's anything that my goal truly is to where you are not reaching out to me to get an update on what's happening on a loan, I'm the one that's constantly giving you that update and that communication. One of us from our team is on call all the time, so we're available 24/7. And it's really totally for our clients' benefits, for the agent, for our builders, for our clients, to where if they have a question or they have a need, they can always get a response and answer from us very quickly. With our in-house processors and all of my support staff that we have, we've created a very streamlined system of how we kind of communicate everything to all parties that are involved. So throughout the system or throughout the process of a loan application, there's going to be constant communication that's given. And that communication is done through emails. So we're going to put up here where you're going to see the whole start to finish of all the different communication lines that you're going to be receiving throughout the loan process. Again, that is not only going to the buyer's agent, but also the listing agent. So there is no question as to what's happening on this loan. Has it been approved? Is the appraisal in? As this final CD or initial CD gone out. So it's that constant line of communication, which is allowing you to free your time up to where you can really go out and focus on new clients, getting new loans under, homes under contract, and not having to worry about what's going on. So the way that it's going to look like from an agent. So a client is going to reach out. Let's say a buyer reaches out and said, hey, I found this home. I'm interested to go see it. And so kind of what's the first step as an agent should you do before you put that customer in your car and go spend hours with them? You want to make sure that they're qualified. And the big thing that can be difficult sometimes is having that comfort, that easy handoff to really where you're not pressuring them to call a realtor, to call a lender, but you're wanting just to make sure that they're qualified and they can afford this home. A big thing too is some of these clients may come to you already having a pre-qualification letter from perhaps a lender that you've never heard of before, or maybe that you are just a little uncertain as to the validity of that qualification. So this is a really easy, great way to kind of do a very soft handoff. So it's typically an introduction, whether that be through text or through an email. So a joint text with me and the client, or an email that just says, hey, you could reach out to Amanda. She's just going to kind of answer a couple questions for you. And I've put up here a sample of kind of the email that goes out. I copy you on that along with the buyer. It's just, I'm here for you. I'm here to answer any questions that you have. during the home buying process. What does that look like? I'm here to offer a free, absolutely no obligation pre-qualification that's going to allow you to know really what the interest rates are, the monthly payments, how much money would you need at closing, truly so you can see what your true buying power is. So it's very, very low pressure, and it just gives you, the agent, that confidence to know that this is a client that can buy now, or lets you know right then that, you know, they need a little bit of time to, whether that be save money or do some credit repair, but it's a great client that you're going to want to continue to remain in contact with, so that in 6 months or down the road, they're ready to buy. Now, once we have started that process and the client has completed an application, you're going to be getting a pre-qualification. So I want to talk to you a little bit about the difference between a pre-qualification and a pre-approval. A lot of clients or realtors, lenders may use those words interchangeably, but they are very, very different. A pre-qualification means that I have spoken with a client. They have given me verbally their income. They've given to me verbally the amount they have in their assets, may or may not pull credit. We may just kind of talk about their credit a little bit. And I'm kind of giving them a very round, rough estimate of what they can qualify for. That's a pre-qualification. A pre-approval is going to be much more specific. Not only have I completed the full application, but I've also received their pay stubs, W-2s. I've received their bank statements. I've looked over their tax returns if they were needed. I have pulled a full tri-merged credit report, which means I've pulled a credit report from all 3 credit bureaus, and I am telling them specifically what they can qualify for. I'm giving them exact mortgage rates that they would be approved for. And it's going to be much more of a firm qualification for that client when they go and purchase. Neither one of these are a guarantee of a loan approval. It's just the depth that the lender has taken on that initial step for that initial review for that client. So that's going to give you a really good idea of the differences between the two. So now let's talk a little bit about different loan programs. And the reason that I wanted to really highlight some of these is because once you, as the agent, receive this pre-qualification or pre-approval letter, you're going to know from me, I'm going to tell you exactly what loan program the client is going to be using, what sort of closing costs the client is going to need, and also what the time frame is for closing. And you as the agent, that's going to be very, very important for you to know, so that you're immediately going to know, okay, if I'm telling you a conventional loan, it's going to automatically kind of tell you a little bit about what's going on with this client. So conventional is going to mean the maximum loan amount is going to be $510,400. It's going to automatically tell you, you're going to automatically need to know what these closing costs are going to mean. So what is the maximum seller contribution? So it's going to be 3% or 6%, depending on the client's down payment. And then right now in the current environment, this is always going to be a little different. It's going to vary from me. It's going to vary from lender to lender. But overall, about 30 days is about what it's going to take to close a conventional loan right now. Ideally, right now, a conventional loan is going to mean that the clients are going to be a little bit more strong. They're going to have more of a savings pattern. They're going to have a little bit more job stability. They're going to have about a 680 credit score or higher. So it's kind of going to give you an overall view of what conventional means and what that looks like for a client. The next loan program is going to be FHA. So for FHA, it's going to have a maximum loan amount of $331,760. Out the gates, the seller can pay more, which is great for FHA. So right now you're looking at a 6% seller contribution. FHA, when you see that on a qualification letter or a pre-approval letter, you're going to immediately need to know FHA. I need to remember what that means when I'm looking at these properties with these clients. There's going to be minimum property requirements. So you're going to be on the lookout for chipped and peeling paint. If there's any broken or cracked windows, you're going to need to look for water stains on the ceiling or the floor. You're going to want to look for any loose railings or steps or stairs on the outside of the decking and the staircase when you're walking up to the house. So it's going to be much more about the condition of the property. And that's really, really strong to know as an agent. And that's something that's going to be at your forefront when you're showing these clients these properties just to make sure that you're aware if there are going to be items that need to be fixed, or maybe even homes that you automatically should not be showing them. Also for FHA, if it is new construction, we need a soil treatment letter. Current closing time for FHA is going to be about like conventional, about 30 days. Your FHA buyer is going to be FHA is a little more forgiving on credit score. They're a little bit more forgiving on savings and employment history. So this is going to be really strong for clients who maybe had some credit blemishes, some issues in the past, or maybe they have very thin credit, which means they really don't have a big credit history. They may not have a savings pattern. They may have a lot of job gaps or job changes over the last 2 years. And this is going to be someone that's going to have credits of less than 680. That's the typical buyer that's going to be in the FHA realm or product. Also, what's very, very strong on FHA is their debt to income, which means that you can actually qualify for a little bit of a larger house on FHA than you potentially could if you were comparing that with the conventional loan program. So that's going to be kind of the overall information that's really, really helpful for you as an agent to know about FHA. The next program is going to be USDA. So USDA is 100% financing. It is a phenomenal loan program as long as the client fits and the house is in an eligible area. So there's no maximum loan amount limit for USDA. There is still seller contribution of 6%. Income restrictions. So income restrictions are very big on USDA, and it's not based on the client on the loan. It is based on how many people will be living in the home. That includes children, that includes in-laws, grandparents, anyone that's going to be living in the property is their total combined income. So I've put on the screen kind of what the Greenville County limits are for USDA. Like I said, that is going to vary based on the county that you're purchasing in, but that's going to give you a little bit of an idea. Soil treatment letters and CO100s are required on every USDA loan. So that's also something that you're going to need to remember immediately when a client's going to be approved for USDA. USDA, I've put on here about 45 days close. That's really going to vary on USDA. Right now, USDA is running about 7 business days is the last time I looked. So what that means, when I say that to you, what that means is once the lender has reviewed the loan and issued a full loan approval, we then have to submit the file to USDA for them to also review. USDA is a first in, first out. There's no rush request. There's no way to push that loan through faster. And right now, like I said, it's about seven business days. So that's going to add that length of time onto that contract. So immediately you're going to know USDA, okay, we may need to look at a little bit of a longer closing window than 30 days. The ideal client for USDA, it's not really going to be credit score. USDA is very forgiving on credit, but I also have clients that have 800 credit scores, and USDA is a great fit for them. Rates are amazing. Mortgage insurance is very low, no down payment, no savings required, and it gives that ability for 100% financing. So that's going to give you a little bit of recap of USDA. Then the last one's going to be VA. So VA is going to allow a buyer to go all the way up to the conforming loan limit. The VA is going to be available to all military families. Again, not very credit score driven. Maximum seller contribution is going to be limited to 4%. A soil treatment letter and CL100 is always required on VA. And right now it's about 30-day closing window for VA loans. Also, a big benefit that Prime Lending offers to all of our military families is that we waive all lender fees. So the only closing fees that the client is paying for at closing is going to be third party, the attorney, the appraiser, the escrow establishment. So it's just another way for Prime Lending to thank all of our military families for their service. So you've gotten this pre-qualification or pre-approval letter. On there, it tells you what sort of loan program they're qualified for. Now we've gone over a little bit of a recap of what those programs mean. So now we're going to know, do I need a CL100? Do I need to be looking at the condition of the property? What is it really looking like as far as the closing window? So now you're kind of really going to have that overall confidence of when you're making this offer. And one thing I completely forgot we're going to talk about is construction loans. Sorry about that. All right, construction loans is something that Prime Lending offers. Right now during COVID, it is a little bit different. We have tightened our guidelines a little bit. We offer a construction loan with an 80% loan to value. credit scores of 700 minimum. It's about 45 days to close on these loans. We offer great protection for the client, and of course for prime lending we do a builder registration, which means that we are going to check the builder's financials. We're going to get recommendations from past clients, from their subcontractors, and from their banker. They obviously are going to have the proper licensing, general liability, potentially a surety bond. We offer a one-time close with a modification at the end. That piece there is very, very beneficial for a majority of my construction clients. And the reason that there's so much, this program gives so much flexibility, which is a very big benefit. For example, a lot of my construction clients are wanting to go ahead and begin construction before their current home is sold. So that means they may have right now the 20% to put down, but when the home is done, their prior home is now sold, they may have another 50 or 60,000 they want to put down. We're going to immediately allow them to apply that down to their loan balance, which is then obviously going to adjust their loan payment down accordingly to the new loan balance. It's also going to give them the total flexibility to go on any loan program that I offer. So fixed rates, variable rates, I can go from 15, 20, 30-year amortization schedules. So it's a tremendous amount of flexibility for the client. During construction, is interest-only payments at a rate of prime plus 1%, and prime currently is at 3.25%. So if y'all have more specific questions on the construction loans, I'm happy to talk and kind of answer those at the very end of this. So now we're going to talk about, so you're making the offer. And so these are a couple of things that are kind of going to be keys to making the most successful offer and putting kind of that best foot forward. Big thing, always list the closing attorney. A lot of times these contracts are coming in with TBD. And at that point, that means that a lender cannot order the title work. We cannot complete some of our loan documentation where it's required for the lender to notify or notice who the closing attorney is. So that's always really big. Also, just touch base with your lender. Just confirm, hey, I'm making this offer. I'm really looking for this closing date. Can we do it? That's always going to be huge because sometimes what we're seeing is these contracts coming in with true closing dates that we cannot meet. And it's just automatically setting the, it puts tension in everything. You're having to ask for extensions. The seller's getting nervous. It's just things that really could have been avoided from the very beginning. If it's an FHA loan, you're obviously going to look at the property. Is it going to meet the minimum property standards? Some of those that I mentioned earlier about peeling paint and chipped windows. If the buyer is wanting the blinds to remain, they're wanting the patio furniture, they're wanting the couch, whatever it is, they're wanting some personal items to remain in the home, that's really best if that's put on a bill of sale at a value of $1 or $0 and kept off of the sales contract. Big thing. A lot of times we are getting questions as to why prime lending or a lender is asking for a CL 100 on a conventional loan, when I'm telling you I don't need a CL 100 on a conventional loan. The reason we're asking for that is because you told me on your sales contract that your contract is contingent on a CL 100. So if you're making your contract contingent, be prepared that the lender may need to see or may request to see that CL 100 at closing. So just be aware of that. And also make sure that you're only putting on the sales contract whoever's on that qualification letter or approval letter. So if it's a husband and wife that are looking to buy this home, but yet the husband's the only one on the mortgage, the husband only needs to be the one on the sales contract. So keep that in mind as well. So that's how to really make a big successful offer. Another thing that I offer to all of my agents is once you've submitted that offer, I will contact a listing agent, introduce myself, answer any questions they have about that client that I can, just letting them know that they are a solid client. It is a solid offer. And again, a lot of these offers are being accepted because I am a local lender, and they know the communication that I offer and just the success of kind of validating this is a really good offer and with a really solid pre-approval or pre-qualification letter. Okay, so now you have an accepted offer. So kind of what does that mean? What happens from there? So I'm kind of going to step through as to line up with some of these emails that you're going to get throughout the process. So once the file has been kind of off my desk, which means I've received all of the income and asset supporting documentation from the client, and we've submitted the file to processing. So the first email that you're going to get, or actually it's the second email you're going to get is called the initial review. So what does that mean? What does it mean that the initial review is complete? What that means is that we have contacted the client's employers and we have received verifications of employment. We have ordered any tax transcripts from the IRS if those were required. We have reviewed, the processor has reviewed the bank statements, the pay stubs, the W-2s to ensure everything lines up with the documentation that's been received back from the employer. So that's really what that means. The appraisal's been ordered. Sometimes it would have already been received by then as well. After the initial review, the second email you're going to get is going to be the appraisal email. The appraisal email we send to, again, all agents involved in the transaction are getting all of these levels of communication. So the appraisal email is going to let you know that the appraisal has been received. We're going to let you know if it is subject to any repairs that need to be done, and we're going to be very clear on what the repairs are that need to be made. We're going to also send out an email that's going to let you know who the appraiser was, what the final square footage is, so that you'll be able to close out MLS once this property closes. Now, a big thing that I'm going to talk a little bit about that's different with prime lending is whenever we submit our loans to underwriting. So there's two different ways or two different paths that lenders choose on how they underwrite their loans. Prime lending does a majority of the processing of the file up front. Our goal is that once this file goes to underwriting, it's a one-touch file, which means it does not have to bounce back and forth to underwriting, back to processing to get more documentation, back to underwriting again. So that's just a little bit different. Other lenders will immediately submit the loan directly into underwriting before it goes to processing, which means the file comes out with an approval, but with a tremendous amount of conditions. So there's just a little bit difference. There's not a right way or a wrong way. It's just the way that prime lending does it. Because again, our hope is that we're only going to underwriting once. Now, so the appraisal is now in, you've received the appraisal email. So kind of what happens next. So now you're going to be getting that the file has been submitted to underwriting, and we let you know the time frame that underwriting is currently running. And then you're also going to get the loan approval email once we receive that. So what does it mean when you get the loan approval email? Does that mean you're ready for closing? No, not quite yet. We're making it though. What it means, underwriting. First thing on underwriting is we are first in, first out. And the beauty of that I think especially is for our clients that are looking at either new construction and maybe they're not closing for 9 months, or maybe it's just a little bit of a delayed closing for 60 days. Those files are not put on the desk, on the corner of a desk and just kind of held because they're working on all these other loans with quicker closing dates. These files go into processing. As soon as they're finished, they go directly into underwriting. So it's always first in and first out, which is a huge benefit. Also, underwriters. Our underwriters, which I mentioned earlier, they're regional underwriters. About 99% of our underwriters work from home. And what we see with that, and this was even way pre-COVID, what we see with that is that we are getting loan approvals sometimes late at night. We're getting loan approvals Sunday mornings, on Saturdays. These underwriters are working 7 days a week. They're working truly. The expectations that we set on these underwriters are very high because we have high expectations for our clients, and our clients not only include the buyers, but also all of our agents and builders. When the loan is approved, it will come out, and that's where we're going to meet these kind of final items that are needed to kind of button everything up. So maybe we're still waiting on the title commitment to come back from the attorney. Maybe we're still waiting on maybe one additional pay stub or one additional bank statement to provide something. It's small little things that we're needing just to finalize everything, prior to us being able to issue that final cleared for closing. So after that, once all those final little things are in, you're going to get an email that says your file is now ready to be submitted to our closing department, which then means that the next email you're going to get is going to be the initial CD email. So the initial CD or closing disclosure. So the initial closing disclosure by law has to be signed by the client 3 days prior to closing, which means that they sign the CD on a Monday, they cannot close until Wednesday. So they can close on the 4th day after they've signed the initial CD. The initial CD is not the final closing numbers, and that's very, very confusing sometimes and a little misleading when that documentation goes out. So the initial closing disclosure, lender fees can no longer change, attorney's fees can no longer change. However, if the attorney does not have the inspection invoices for maybe the CO 100, the home inspection, the radon inspection, Maybe they haven't heard back from the HOA company yet, so they do not know their final HOA fees. All of that can still change. So all of those numbers, that final number really can still go up. So a big kind of tip that I give my agents is, as soon as you're getting these inspections, if they are not paid outside of closing, immediately send those over to the attorney, copy me on them. That way I can ensure that when that initial CD goes out, those fees are already on there, and it's just setting that client up for a little bit more of an accurate figure. So once that CD has been signed, I'll send that email out to all of the agents. After that, you're going to get the final closing disclosure. So I copy this only to the buyer's agent. Okay, so it's going to be the buyer's agent and the client. And this again is another sample of kind of that email that I send out, which just is going to itemize everything out on that final CD. It's going to let them know, again, we're reiterating the time, the date, we're iterating the attorney's address, letting them know exactly how much they need to bring and in what format, wire, a certified check. We're letting them know when their first payment is due. So kind of just a big recap of everything that final closing disclosure provides. So that's going to be kind of the final email that you're going to get from us. And then also the communication level does not stop after the closing. So here's another example of an email that you're going to get from us. It just lets you know if the loan is funded. And that's a big thing as well. So the funding process, sometimes that can take hours, I've been told, at closings. Our funder, as I stated earlier, is local. Her name is Megan. She's amazing. And she's the one that funds all of our loans. She funds them right there out of our office. So if there is anything that comes up, now with COVID, a lot of attorneys are not allowing lenders to be at the closing. So if there's a question, I am there at the office. I'm right there with Megan to where we're making sure that we're getting it handled quickly and getting that funding authorization sent out. Okay, so COVID impact. So this is a big thing. What's really changed in the mortgage industry due to COVID? So a couple of things that I'm going to talk about. The first one's going to be furloughs and or decreased pay. So we still are seeing clients that are being impacted and still are on furlough. So a furlough means that they are taking time away from work unpaid. So that is definitely going to have a dramatic impact to their total income. Now, if a client is hourly, then we have been given guidance from the federal government that we have to take their year-to-date income and average it out. So it definitely decreases their total overall income. If they are a salaried employee, it can be treated a little bit different with a little bit more flexibility. So that's going to be huge to know what they could have afforded pre-COVID may be very different if they've been impacted by COVID. Also, big thing is we have seen a tremendous amount of clients that have taken advantage of the government's deferment program, which means they may have a mortgage in deferment, student loans that are now in a COVID deferment, and installment loans like their car loans. So if a client took advantage of that, and unfortunately some clients didn't even ask it, they were just automatically put into this 3-month deferment. What they're saying is that their income was so negatively impacted that they were unable to make those loan payments. That's what the mortgage company is saying. So yes, that means that if they are currently in a deferred loan in any sort, they have to be out of that deferment period before they can enter into a new loan. We have to know that they have the ability to make these loan payments before they can enter into, obviously, getting a new mortgage loan. So that's huge. So if you're getting past clients that are reaching out to you for guidance on, hey, should I put my mortgage in deferment? I've been offered this. Should I do this for my car loan? You really, truly want to seek guidance from a trusted lender, or really, really discuss that client with what their future intent is. If they are looking to buy, they do need to stay out of any of these deferment programs. A big thing also is the PPP, which is the Paycheck Protection Program. So these are going to be for your self-employed borrowers. If you have a self-employed borrower that has taken advantage of this Paycheck Protection Program, that is a loan that they've received from the government. We believe that that loan is going to be forgiven. However, we're not certain of that. So therefore, we have to get the terms, the loan agreement terms from that PPP, which means now they're going to have to qualify with that loan payment. Again, this is going to have direct impact to their total qualification. That's been a big impact with COVID. The next thing is going to be non-W-2 income verifications. So the next two things I'm going to talk about are going to be direct impacts to getting right there at your closing. So if you have a client that is self-employed or a client that receives income potentially from rental income or something outside of a W-2, then we have to verify prior to closing that their income has not been negatively impacted. And the way that you do that is through bank statements. So there are a little bit more steps that these clients are going to have to take prior to closing. So if you are hearing from a buyer, my gosh, I've provided 6 bank statements, now she's asking me for something else. This is why, because we truly have to see that they are still receiving these regular deposits coming in to be able to confirm that their income has not been impacted. The new day of closing requirement, Prime Lending is required to reach out to the employer or the client directly the day of closing to again confirm that their income has not been negatively impacted. We've got to know from the last time we did the verification up until the day of closing that they have not all of a sudden either taken a reduction in pay or been furloughed. So that's something else that's been changing. Lastly, I want to talk a little bit about this COVID market. So we are getting a tremendous amount of files that are coming in with 3 weeks, sometimes 2 weeks on a closing date. And they're feeling this pressure. Agents are feeling this pressure to try to push these loans through as quick as possible, these closings through as quick as possible because of this COVID market that we're in. And something that I kind of want to stress, and I know there's been a bunch of this out on social media and through a lot of these different groups and sites, is it is not just the lenders that have seen unsurmountable volume. You are looking at the appraisers are taking longer to get the appraisals back in. You're looking at the attorneys, their title abstractors are taking longer to get information from the county. It is everyone that is involved in the transaction, home inspectors, your termite inspectors, everyone right now is overwhelmed. And so it definitely is taking a little bit of a longer process to get all these files through. So just working with that lender and having true and honest open communication on what is a realistic timeline. Something to consider. If you make an offer on, let's say, a Thursday, okay, so you're offering a new contract on a Thursday, you're saying a 30-day closing. Then all of a sudden, that offer isn't even finalized and submitted into the lender until Monday. So now we're at, what, a 24-day closing? And let's say on Monday, the lender is reaching out to the buyer. We're now kind of rushing this as quick as we can, telling the buyer, we need your pay stubs, we need your bank statements right away. It may not be until Wednesday or Thursday until we're getting bank statements and pay stubs from that buyer. So now we're now at a 3-week closing. So that's kind of where all of that comes in, and where having that constant communication with your lender is really going to set everybody up for success. And then I'm going to talk a little bit about misconceptions and red flags. So misconceptions, a big misconception is for a client to say, you know, here's my pre-qualification letter from my favorite, I have to say it, Quicken Mortgage. And I'm really, really afraid. I don't want to talk to Amanda. I know that, you know, she's your lender or that, but I'm just so afraid. I'm so afraid they've already pulled my credit. I don't want my credit pulled again. That is a huge misconception. Multiple lenders pulling credit is not going to have a negative impact to a client's credit score. It is very, very different than if they are car shopping or credit card shopping. The type of credit report that mortgage lenders pull is a mortgage residential report. That mortgage residential report is not going to have as big of an impact to those credit scores as just a regular credit report being pulled if they were at the Ford dealership. So that's a huge misconception. So immediately give that client the confidence and the reassurance that that is not going to be a negative impact to them. The next one is going to be VA. I see this a lot. I see where there's maybe multiple offers going in. My client is a military family. VA loan is really what they need, but yet their offer is being rejected solely because it is a VA loan. This is a huge, huge misconception. VA loans are not riskier loans, and they do not cause any sort of additional concern for the seller. And I put up here the word Tidewater. And Tidewater is, to me, a huge benefit for VA. VA is the only loan program that requires the appraiser to notify the mortgage company up front if they're having issues with the value. So they will reach out to us, they will claim that they have Tidewater, which means they cannot find the value, and they will give all agents 48 hours to provide comparable properties for that appraiser to review. So they are giving you upfront a full opportunity to explain and show documentation as to how you came to that value. Once that is then submitted to the VA appraiser, do we still have low appraisals come in? Absolutely. Have I had Tidewater been called, provided comparables, and then the value met? Absolutely. So VA loans are truly an amazing loan program for people that have served our country, and truly they are not riskier. They are a great, great loan program. So that's a huge, huge misconception that I see come pretty much regularly. I'm seeing that. So Tidewater is actually not a bad thing. The lender with the lowest rate is the best lender. Not true at all. Typically, if you are talking with a lender and you're automatically seeing a 0.25% lower rate or some drastic lower rate, 100% of the time it's because they're charging more fees, which is not a good thing always to the client. Sometimes it makes sense for them to pay a little bit more and get that lower rate. Sometimes it doesn't. So again, a big misconception. Also, putting 20% down is always the best option and that way you avoid PMI. Huge, huge misconception. If you talk to pretty much any financial planner or advisor, they are going to advise clients, finance as much as you can finance on a mortgage loan. Mortgage rates are so low, you can make more money by keeping it invested in the market than by putting it down onto your loan. So huge, huge misconception. PMI is nothing to be afraid of. There are a lot of different ways that you can structure PMI to where you're not even actually paying it on a monthly basis. So definite benefits to not always coming in with that full 20% down. All right, red flags. So you're talking with the client. Just a couple of things to kind of keep in mind with big red flags. You're making the offer is accepted, and then all of a sudden you get an earnest money check from somebody that is not involved in the transaction. It's a huge red flag. That's going to be something that you're really going to need to kind of stop, not accept, and talk to the lender first to ensure that that's not going to cause any problems on the loan. All of a sudden the client makes just a comment to you that they are switching careers, or that they are looking at now taking a job that maybe they were salaried and now they're going to go 100% commission because they're going to have the opportunity to earn more money, even if it's with the same employer. Any sort of discussion like that needs to be an immediate red flag. Also, let's say all of a sudden they're showing up in a brand new car, or they're talking to you about going car shopping or furniture shopping. Any of that, again, needs to be a big red flag. So just a couple kind of things to consider. And then that's it. Yay! So if anybody has any questions, anybody wants me to kind of go into a little bit more detail of anything that I talked about, now's the time.
All right. So no questions yet.
No.
Amanda, we want to say thank you for your time.
Absolutely. It's my pleasure.
Guys, listen, we have a perfect opportunity to get some questions in. I'm gonna run through a couple things, just so y'all know what's going on at the HBA. While I do that, right below in the Q&A box, Amanda's here. We've got her. Use this opportunity. So from an HBA standpoint, we want to say thank you for joining today. One, I wanted to run over a couple of things coming up. September 11th is our clay tournament. We are going to have it. COVID did not stop us this year. We're extremely excited to be at the Clinton House. If you're interested in learning more, give us a call here at the office. We also have September 17th will be the Bridge Awards. It is going to be virtual this year. Unfortunately, we're not going to all get to be dressed up. I think my joke is I'm going to be in a tuxedo jacket, a shirt, and shorts. It's going to be fantastic. And then the other one is October 1st will be the golf tournament. We will be out at Willow Creek. Registration is open for all of them. So we have a great opportunity to come out, enjoy some fellowship with some friends. I do see a couple of questions coming in. Let's see if I can get to them.
I have some in chats too.
Do we?
Yes.
What are they?
Amanda, tell us some rough credit scores for USDA approvals. It said it's looser requirements.
Okay, yes. So USDA is definitely going to be looser requirements. So right now for prime lending, it's going to be 640. It's going to be the minimum credit score for USDA. You will see a little bit of that vary from lender to lender. I think VA guidelines could go as low as 580. We're just a little bit more conservative right now for COVID. Any down payment assistant programs for FHA and conventional? Yes. That's going to be your state housing is going to offer down payment assistance programs. State housing is giving $6,000. That is a forgivable loan, either 10-year or 20-year forgivable loan, depending on the client's income. And that's going to allow the client to use that $6,000 either towards down payment and or closing cost. So that's another great question as well. So yes, those programs are out there.
We have a couple more coming in.
Okay.
I'm gonna put them over here.
Oh, great. Okay. Can you approve for GCRA housing? I need to know what that acronym stands for. Very sorry. It's not, I do not know immediately what you're asking me. So if you would not mind just letting me know exactly what you're looking for on that. And then, let's see if she asks again.
Nina also did say, thank you so much for your
Oh.
presentation. And yes, we can send out a presentation.
Oh,
But
perfect.
she's still
Oh,
looking
yes,
at it.
yes. So if someone would like this presentation provided to them or any additional materials, we have actually packets that we can send to you so that you have this and you have a little bit more. We actually have a great realtor cheat sheet that we have that we laminate that we give to y'all, which is going to give great information on the specifics of each loan. So not only the maximum seller contributions, things like that, but it's also going to go over to you a good idea what closing costs are for different price points, bankruptcy and foreclosure requirements, things like that that are really going to help as you're talking with the clients and working through these offers.
Let them know. We'll put your contact information back up at the end.
Okay, yes, and they're letting you know as well. Once I'm done, they will put all of my contact information up. Cell phone is an amazing way to get in touch with me. I'm fine for you to text me, call me, stalk me, hunt me down, email me, whatever. It's a great way. And then I think there were a couple more questions.
Sorry.
That's okay. Okay, then let's see, how do you select an appraiser? Is there an appraiser pool? Yes, so for prime lending, we do have appraisers that are on a rotation. The amazing thing with prime lending, and I cannot, again, stress this one enough, because I have worked for other mortgage companies and I do kind of understand what a great advantage this is. I personally selected all the appraisers that are on our pool. So I know every single one of them. I have great communication with every single appraiser. A big misconception is that I or you cannot talk to the appraiser. That is not true. We can talk to the appraiser. You can be there when the appraiser comes to the property. The thing that you cannot talk with the appraiser is the price. You cannot pressure them to meet a certain appraised value. You cannot really ask them why did it, you know, anything really about value, but you definitely can be there. You can talk to them about what comparable properties you used when you came up with the listing price. You can talk to them about maybe the home down the street that really shouldn't be used as a comparable and why. Was it a distressed sale? Was it a divorce? Something like that. Any sort of information that can help the appraiser is great. Past appraisals that were done, past square footages that were done, maybe a sketch of the home, any of that information is great to have. So yes, we do have a pool of appraisers. It does rotate through those appraiser pool. So no, I cannot select an appraiser, but again, I only have a list of like 4 or 5 appraisers. So I kind of know who it's going to get. Also, if we do have a value that comes in low, prime lending does go through a rebuttal process. So we're immediately going to allow you to submit to us comparables, more information to that appraiser to give that appraiser the opportunity to look at that and see if they cannot get the value up. So all of that we definitely allow. And then
Amanda, if student loans are in forbearance, how are they calculated in DTI?
Okay. Student loans in forbearance. So forbearance just means that they are not currently in a monthly payment program or payback period yet on that loan. So it depends on the loan program. So it can be anywhere from $0 up until 1% of the balance of the loan. So if the loan was for $20,000, you're going to have to sue 1% of that, which would be $200, would be the payment. So your government programs, your FHA, USDA, those loan programs are going to require you to do the 1%. VA and is going to allow you to do, actually, no, USDA allows you to do 0.5%, excuse me. VA is going to allow you to do 0.5%. One of the conventional programs also allows you to do 0.5%. So that's kind of going to be where you're at. If they're in an income-based repayment program, which is like an IBR program, if the payment is 0, some of the programs are truly going to allow you to count 0. So that's a great question.
How would you explain to a buyer that the appraisal is real and not coming in on what the builder has priced the home at?
That's a great question. So appraisals can be very, very subjective. And what that means is you may get 2 appraisers out there and you may get 2 different values, because it all definitely depends on the comparables that were used. Yes, the appraiser does get a copy of that sales contract. Yes, they are trying to meet that value. And a lot of times the value does come in at the exact sales price. That does not necessarily mean to say that the appraiser is just checking a box and putting that value on there. But what it does mean is that appraiser knows that they have not only a buyer, but they have 2 agents and maybe even sometimes a builder as well that have all agreed that this is the value of this home. So with all of these parties that have already agreed, that's really what the appraiser is trying to do, is agree with you and come to an agreement that, yes, this is the value of the home. So no, it is very subjective. It is a little bit difficult, but absolutely, when you truly do look, because some of these appraisers are coming in with sometimes 6, 7 comparable properties, 4 or 5 of them being sold, 1 or 2 of them still being listed, to where you truly can see the true breakdown of the square footage, the options and upgrades maybe that are in that home, and that where you can truly see what this looks like with the homes that are in the surrounding market, in the surrounding area.
We got one more.
Okay.
You mentioned 680 and below credit score for FHA.
Mm-hmm.
What is the lowest?
Okay.
It says my current client has a 635 credit score.
Okay. All right. So right now, prime lending is at a 640. Again, that's across the board with all of our loan programs, and that's due to COVID. Now, the one thing that I do offer to any client, if I pull their credit and their credit score is below the requirement that we need, there are several steps that I do to help them, because my goal is to get them in a property. So I will not only go through that credit report with them in detail and explain to them why it is the score that it is. I will then run a free, what we call credit expert, which comes directly from the credit bureaus, which will tell us specifically if they do A, B, C, and D, this is the direct impact it's going to have to their score. I will run that. Then I will go through that with them to let them know if these options are feasible. Sometimes it's just the fact of they actually need to open up more credit or use that or utilize the credit that they already have. So that's constantly going to be something that myself and everyone on my team is going to truly work with that customer. We're not going to say, nope, they don't qualify, and move on to the next buyer. So that's a way that, kind of help them, because a lot of these clients just don't have the proper education to really know how to properly build their credit and use their credit wisely.
Did you answer skip appraisal loan programs?
Mm-hmm.
Okay. Do you have skip appraisal loan programs?
Okay. So the question was, do we have skip appraisal loan programs? And I think what you're asking me is, do we allow for an appraisal waiver? I think is what's being asked. And yes, absolutely. Those are called PIWs, which means property inspection waivers. So yes, we definitely offer those. That is something that will come immediately through the online underwriting system that all lenders use. They will automatically tell us if the property is eligible for us to waive that appraisal. I then give the client the option. We're allowing you to waive the appraisal on this purchase. Are you comfortable with that? Some clients, the majority of clients choose yes. Some clients still want to go ahead and move forward with the appraisal. But yes, that is definitely something that we offer. And we also offer that even on loan programs with have greater than an 80% loan to value. So just because they have mortgage insurance is not going to immediately mean that they have to have that appraisal. It's a great question. All right. Well, guys, thank y'all so incredibly much. I think my contact information is up on the screen. So yes, perfect. Yes, so it's all in there for you. So please definitely give me a call and let us know if our team can kind of help. All right, thanks. Thank you. Taylor.
Again, Amanda, thank you so much for your help. We
Absolutely.
appreciate all of this and everything you do for the HBA. Everyone, just a recap, there will be an email sent out. The PowerPoint will be on it. Amanda's contact information will be on it. And if you have any questions coming up over the next couple of days, email Amanda or email us at the HBA and we can get the question straight to her and make sure we get you an answer. Looks like we landed right on 10:30. So that is all for today. Be sure August 20th to join us for Inspection 101. Thanks, everybody.